Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlett Fu.
Hey, most names in the S&P 320. Katie actually gaining ground today, 181 losing ground, and you've got 2 unchanged.
Absolutely, some good breath there. Let's take a look at the circle and see how it broke down on the sector level. You can see a lot of green on this screen. Tech was your big gainer on the day. That sector higher by about 1.4%. Some other worthy mentions here. Industrials having a good day. So too did communication services. If you're looking for some red, though, you can look to consumer staples. That was your biggest loser on the day.
Why would you do that? Why would you look for the red?
Some people do. We've got some bears on this side.
I have to look at those.
Yeah, it's sort of your like job, Tim. Well, you probably found some in consumer staples. That was your biggest loser on the day.
All right, let's get to some individual gainers. No surprise, shocking Intel atop that list. Top gainer in the S&P and the NASDAQ 100, finishing with a gain of about 23%, at its highs up as much as 30%. This, of course, after Nvidia agreed to invest $5 billion in the company. The two are going to co-develop chips for PCs and data centers. So just so much going on in this name. The whole SOX, I should say, Philadelphia Semiconductor Index, we saw many names, and I'm just going to pull it up real quick. I think almost
that's at a record high as well. Carol, I'm just going to jump in here. We're getting FedEx earnings crossing the wire right now. The company providing its fiscal first quarter numbers here. EPS $3.83 a share. That is a beat. It looks like on the revenue side, $22.2 billion, a modest beat there as well. But the company does appear now to be back to putting in its forecast. Remember, it had pulled its full year forecast because of uncertainty here about the outlook with regards to trade policies and geopolitical issues. Now saying that for the full year, it sees adjusted EPS in the range of $17.20 to $19. The street was looking on average for $18.25 here. I also just want to point out here, when it comes to the revenue side here, they do appear to be hedging their bets just a little bit more on that. The company has a lot of asterisks in this press release right now with regard to some of the issues going forward with regards to not knowing what's going on with policy. But overall, we should point, this is now a company that had actually reported flat to declining revenue in 8 of the past 10 quarters. That streak is now broken. 3% growth here in the quarter, and guidance going forward of 4 to 6% for the full year.
And you can see shares popping a little bit in the after hours trade. Just the fact that they issued a full year profit outlook is a surprise here. It was a very wide range when it comes to full year adjusted EPS expectations, $17.20 to $19. But again, Tim, just the fact that they did come out with some numbers. Sentiment had been so low on this name. Right now being taken as good news. We'll see if that sticks.
Yeah, shares up about 3.7% in the after hours. Ahead of this call, Raj Subramanian, the FedEx president and CEO, saying that earnings growth underscores the success of their strategic initiatives. They're flexing our network, reducing our cost to serve, further enhancing our value proposition and customer experience. Strategic initiatives paired with our operational data platform for moving 17 million packages through our network daily position us well to serve customers in any environment.
All right, and I am also taking a look at shares of UPS. They're not apples to apples when you think about both of these companies, but nonetheless, UPS also taking a look at this one popping in the aftermarket up about 1%. So a little bit of movement in that name, as well as, again, we see FedEx certainly rallying in a big way, up about 5% here. All right, let's go back to some of the individual gainers. I mentioned Intel, that's out there, finishing the day with a 23% gain. We saw the SOX also moving up, and most names in that index 26 higher. SOX up about 3.6%. So the whole semiconductor space lifted by this news. Novo Nordisk, the ADRs that trade in the United States, that one finishing with a gain of more than 6%. This stock has been on a tear, rallying up 5 days in a row, and it's up around 13% in that time frame, the most in a month after its diabetes blockbuster Ozempic beat Eli Lilly's older drug Trulicity in a real-world survey of certain U.S. patients. So some optimism in that one. Want to mention a company we don't talk about, 89 Bio, ticker is ETNB. This stock up 85% in today's session. Roche, and this kind of plays into this whole subject, an area of weight loss drugs. Roche said it will acquire this biopharmaceutical company for up to $3.5 billion, bolstering Roche's pipeline in the market to treat obesity and related illnesses. 89 Bio plays into this field in particular. And then, because if I don't say it, Romaine's going to say it, we did have another IPO today. NTSK, Netscope. I know. Sorry. Finishing the day, it was up as much as 28% in its first day of trading, but finishing with about an 18% gain. This is after it priced at the top end of its range. Do you have anything, Romaine?
Don't worry. I'll get you back tomorrow. If you're here tomorrow. I know you work the 4-day weeks.
Moving on.
Tomorrow's day 5. ARM Holdings. I wanted to start with ADRs of ARM, down 4.5% today. This is the semiconductor design and manufacturing company after Nvidia agreed to invest $5 billion in Intel and said the two companies would co-develop chips for PCs and data centers. Now, Nvidia currently designs its own processors, which work alongside the accelerated components using tech from ARM Holdings. The Intel tie-up should have no impact on ARM, according to Jensen Huang. Nvidia is proceeding as planned with ARM-based products, he said. Still, investors a little skittish on the stock today and sending shares lower. Live Nation also falling today, down 2.8%. The FTC in 7 states sued Live Nation Entertainment and its Ticketmaster subsidiary for failing to stem the use of automated ticketing bots and large-scale resale operations. The FTC alleged that Ticketmaster's actions violated the FTC Act and the Better Online Ticket Sales Act, and the company took in $11 billion in fees on primary and resold tickets between 2019 and 2024. And finally, watching shares of Walt Disney down 1.1% today. It's the parent company of ABC. This after the network said that Jimmy Kimmel Live will be off the air indefinitely amid a backlash to remarks that Jimmy Kimmel made about the killing of Republican activist Charlie Kirk. The move was sparked by Nexstar Media Group, which owns dozens of ABC TV affiliates, saying that it would pull the show from its stations of remarks that were, quote, offensive and insensitive. Disney shares down by 1.1% today.
All right, let's take a quick look in yields. We did see a bit of a sell-off earlier in the session, though that sell-off did abate just a little bit. Nevertheless, yields are higher across the curve, about 2 basis points on the shorter end. When you go out to the 30-year, up about 4 basis points. So a bit of a bear steepening here on the day and a widening here on that 530 spread here. So a big question right now as to how the market, the difference of interpretation of what the Fed did yesterday between how the stock market is reacting and how the bond market is repositioning.
Yeah, really, a really important point. We'll see how this kind of, I feel like, plays out as we start to get more data points or the next round of data points.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.